Right, good morning, students. It's 9 o'clock. Let us get going with the class for today. Just the usual things in terms of please complete the attendance register. And then also at the end of the session, we will appreciate it if you can just complete our feedback form so that we can offer you a better tuition service. And then also on your notes, you should have downloaded the notes already. And then today we are working on lecture number 6. So you must have the notes for lecture number 6. Can I just answer? I've got a query here. So just before we get going, let us just start this one here from Christopher. Kindly be informed that solutions for last class isn't available. Okay, Christopher, I will do that one. I'll make a note of that and I will upload then. I'm thinking that it is there, but I'm going to upload again there. Just make a note of that. I will upload the solutions of lecture 5 under the resources for lecture 5. Okay, I will do that, Chris. Right, guys, let us get going with today's lecture. So in today's lecture, we are still busy with financial statements. And in our last lecture, last week, we had a look at how to prepare the financial statements with a focus on the format of your financial statements. When I speak about the financial statements, I am referring to the statement of profit and loss and other comprehensive income, statement of changes in equity, and your statement of financial position. Those were the three financial statements that we worked on last week. Now, last week we focused only on the format, as I indicated earlier, but in today's lecture, we are going to take a look at additional information. Right. Now, if you want to prepare your financial statements, you are working from your trial balance, the amounts in your trial balance. Now, the amounts in your trial balance is coming from what has happened over the entire financial year, how the amounts has accumulated to an amount that you will get at the end of the financial year in your financial statements. For example, sales. If sales in your trial balance at the end of the year is an amount of 980,000 Rand, it means that over the entire financial year, all the sales for each month has been added to the sales account balance, and the balance that you see at the end of the financial year, that is the sales amount then for the entire financial year. But it can also happen that at the end of the financial year, after you have now got the totals for the year, we may need additional information. This additional information is also called adjustments. It has not yet been taken into account when we prepared our final trial balance. So what we must now do is we must take these adjustments and additional information, and it must first of all now be recorded in the books of the business. We record these entries via general journal entries. Once again, indicate the account to be debited and credit the other account. So your journal entry has got to do with a debit and a credit. One account needs to be debited, another account must be credited, and you will record this in the general journal for your adjustments. Your adjustments, after it has been recorded in the journal, must now be posted back to the ledger, and the amounts in your trial balance will be updated then. So once I do the explanation of the adjustments, I will show you how those amounts in the trial balance will be updated. So our focus for today is we're going to take a look at adjustments and additional information, how that must be recorded in the general journal, how it will impact on my trial balance, and how it will eventually impact on preparing the financial statements. So let us get going with our notes for today first. You are now supposed to return now and take a look at what I have got there for you guys as your notes. If I can get it. Okay, I've got it. Right. As I indicated to you guys earlier, at the end of the financial year, you will get additional information. And this additional information or adjustments must first be recorded in your general journal. Now there's about 8 different kinds of adjustments that you guys will deal with in FAC1501. So let us take a look at each of these adjustments. The first adjustment is called accrued expenses. Now, accrued expenses will occur when at the end of the financial year, we will get additional information that an account that we were supposed to pay for the year has not yet been paid. Example, it could be that the telephone account for the last month, say now if your financial year ends on the 31st of December, and now you receive the account for the December account in January, which means that you did not pay the December account as yet. Therefore, You didn't pay that. That is part of the current year's financial statements. It's an expense for the current financial year. Even though you are only going to pay it in the new financial year, it's part of this year's expenses, which we did not pay, and that will fall under the category of accrued expenses. If you didn't pay your salaries and wages for the year, or there's a portion that is still outstanding, it's called accrued expenses. Now, accrued expenses is listed as a liability because you are owing somebody money. So if you want to record the adjustment for accrued expenses in the books of the business, you will debit the expense account, and you will credit your account accrued expenses. So if it was salaries and wages that was not paid, debit salaries and wages. If you didn't pay water and electricity, debit water and electricity. Okay. Those are the two accounts involved. The impact on the statement of comprehensive income is that you must now increase your expense. Example, if you have paid out already 200,000 Rand in wages, and now we get additional information that we must still pay another 10,000 Rand for wages that we didn't pay. So we paid 200,000, we must still pay another 10,000. That 10,000 is called accrued expenses because we didn't pay it. But the total expense for the year is now 200,000 plus the 10,000, and therefore your expense for the year is then 210,000 Rand. So the adjustment will mean that you will have to increase your expense. And in your statement of financial position, accrued expenses is part of your current liabilities. So just to summarize this now, this is the first adjustment that we are dealing with. This is the adjustment called accrued expenses. Accrued expenses will occur when at the end of the financial year, there is an expense that you did not pay. Adjustments must be recorded in the general journal. Two accounts involved. One must be debited, the other one must be credited. Each adjustment will impact on your statement of profit and loss and other comprehensive income, and also impact on your statement of financial position. In the case of accrued expenses, as far as your statement and profit and loss is concerned, your expense will increase. In your statement of financial position, accrued expenses is part of your liabilities. Any queries at this stage? Right, we move on to our next adjustment. Back to your notes now. Your next adjustment is the adjustment called prepaid expenses. Now, prepaid expenses will occur when you paid in the current financial year, but it is an expense of the following financial year, of the next financial year. This happens a lot, especially with expenses such as insurance, where perhaps you are paying during this financial year, but the expense is actually for the next financial year. You are paying in advance. That is called prepaid expenses. Prepaid expenses is listed as an asset. So as far as your journal entry is concerned, you debit prepaid expenses and you credit the expense account. So if it was insurance that is paid in advance, debit prepaid expenses and you credit your insurance account. In your statement of comprehensive income, your expense you will have to decrease your expense because you have paid actually too much. You have paid for the next financial year. And prepaid expenses will appear under your current assets. Under your current assets, there's a line item called prepaid expenses. The next adjustment that we are dealing with is called accrued income. Accrued income will occur when we as the business were supposed to receive money for the year, but we did not receive it. So the money is still due for the current financial year. It happens a lot when we have got rental income perhaps, where a tenant was supposed to pay us rent, but then the tenant didn't pay for a month or he didn't pay the last month. That is money due to us. We call that accrued income, money that we did not receive for the current financial year and we were supposed to receive it. That accrued income. Accrued income is listed as an asset to the business because somebody owes us money. It's the same as a trade receivable. Therefore, if you will record this now into your general journal, you will debit your account accrued income and you credit the income account. If it's rental income that we didn't receive, debit accrued income, credit rental income. If it was interest on fixed deposit that we did not receive, we debit the account accrued income and we credit interest on fixed deposit. The impact on your statement of profit and loss and other comprehensive income is that the income account will have to increase. And accrued income is listed as an asset. Under your current asset, you will have a heading called, a line item called trade and other receivables. And accrued income will be listed there. Our next adjustment that we deal with is our adjustment called income received in advance. Income received in advance. Now, when we talk about income received in advance, we say that income received in advance would be where we are receiving money in this year. We receive the money this year, but it is actually the following year's income. Example, it could be that somebody is renting a premises from us now and he must pay us rent. So it could be that he is paying rent for the entire financial year. But he moved in on the 1st of January. Our financial year ends on the 30th of June perhaps. Now he has paid for this January, February, March, April, May, and June of this financial year. So he paid for 6 months of this year, but he paid for the entire year. That is why the other 6 months that he has paid, that is then called income received in advance. So we received then the money for 6 months of this year, as well as 6 months of the next financial year. We received too much money, and that is why that is called income received in advance. Income received in advance is classified as a liability. So in terms of the journal entry, credit the income received in advance because it's a liability, and you debit the income account. In your statement of profit and loss and other comprehensive income, you will have to decrease the income account, and income received in advance in your statement of financial position will appear under your liabilities. There's a line item under your current liabilities called income received in advance, and that is where you will show that amount. The next adjustment that we will deal with is the adjustment called additional credit losses. Additional credit losses. Now, in your trial balance, there may be credit losses. Now, the credit losses that appear in your statement or in your trial balance will tell you what is the amount of credit losses written off already during the year. So if there is 300 Rand as credit losses in your trial balance, it means that during the course of the year, you wrote off already trade receivables to the amount of 300 Rand. Now, under your additional information and adjustments, now you get more information. More information telling you that you must write off another 100 Rand. Now, because you must write off another 100 Rand, your credit losses will increase. So back to our notes now. When we do work now with additional credit losses, the accounts affected will be trade receivables and credit losses. Credit losses is an expense. The expense will increase on the debit side. So we will debit your account credit losses and you credit your trade receivables. In your statement of profit and loss and other comprehensive income, your credit losses, there will be more credit losses, so your credit losses increase. And trade receivables is an asset. So in your statement of financial position, you will decrease your trade receivables control. We move on to our next adjustment. Our next adjustment deals with consumable inventory on hand. Here we are referring to stationery or packing material that will still be left at the end of the year. So you can have the situation whereby you perhaps bought stationery for 900 Rand, but you've only used up 600 Rand of that. And at the end of the year, there is still 300 Rands worth of stationery left. So the journal entry to account for that, we work with an account called inventory stationery. If packing material was on hand, we call that account inventory packing material. So inventory stationery, we debit now because inventory stationery is classified as an asset. And you credit stationery, you must decrease the stationery account. So when you are doing the statement of profit and loss and other comprehensive income based on my example now, your stationery account will not have about the expense is not 900 Rand, but the expense is 900 minus 300 because there was still 300 Rand left at the end of the financial year. So your expense for stationery in your statement of profit and loss and other comprehensive income will only be 600 Rand. And in your statement of financial position, inventory under your current assets. The first line item under your current assets is inventory. And the inventory will then be equal to the closing inventory of merchandise plus your inventory of stationery or inventory of packing material. Let's just find out, guys. Any queries so far? Good on that? Right. The next adjustment that we're going to take a look at is our adjustment called depreciation. Now, let us first of all discuss a few things around the depreciation. Depreciation is an expense to the business, and depreciation is the amount in which our non-current assets, we're talking about our vehicles, our equipment, our machinery. It has got to do with depreciation is the amount in which our non-current assets decrease in value due to wear and tear. So whenever you are using the vehicle over a period of time, the value of that vehicle will decrease, and the amount that the vehicle will, the value in which the vehicle will decrease, we call that depreciation. The next term that you must understand is the term called accumulated depreciation. When we talk about accumulated depreciation Accumulated depreciation will mean the sum of all the depreciations. So if you bought a vehicle for 200,000 Rand, and in the first year, the value of the vehicle has decreased by 20,000 Rand, then we say depreciation is 20,000 Rand. That's the expense for the year. In the next year, if the value of the vehicle has decreased again by another 20,000 Rand, then for the second year, we will have depreciation again of 20,000 Rand. But now we have got accumulated depreciation. And in the first year, we wrote off 20,000. In the second year, we wrote off 20,000. So in total, our total amount of depreciation, year one, 20,000, year two, 20,000, that is 40,000 Rand. And that 40,000 Rand is called accumulated depreciation. So accumulated depreciation is the sum of all the depreciations. Depreciation is the expense only for 1 year. So in terms of the terminology, you must know now what is the cost of the vehicle. Cost price will refer to the purchasing price. Depreciation is the expense for 1 year. Accumulated depreciation is the sum of all the depreciations. The next concept that you must understand or that you must know is the concept called carrying value. What is the carrying value of the asset? The carrying value of the asset is the real value of the asset. And carrying value is equal to the cost price minus your accumulated depreciation. Carrying value is cost minus accumulated depreciation. So in my example, after 2 years, remember now in my example, we bought a vehicle for 200,000 Rand. In the first year, we wrote off 20,000. In the second year, we wrote off 20,000. So my accumulated depreciation after 2 years is 40,000 Rand. But what is the carrying value after 2 years? Carrying value is then the cost price of 200,000 minus accumulated depreciation of 40,000 Rand, giving you a carrying value of 160,000 Rand. Right, back to our notes. I have explained to you now what is depreciation. And now we are going to focus on the methods. How do we calculate the depreciation? In FAC1501, we are just dealing with 2 ways, 2 methods in which you can write off the depreciation on an asset. The first method is called a percentage of the cost. So they will tell you what is the percentage on the cost price, 10% or 20%, and you take the percentage given in the question and you apply that now to the cost price. That method is also called the fixed amount method because it is every year the same amount, or it is also called straight line method. So straight line method, fixed amount method means a certain percentage on the cost price. The second method is called the reducing balance method or diminishing balance method. Now with the diminishing balance method, it is once again a percentage, but it is a percentage on the carrying value. So you must first calculate the carrying value. And the carrying value is cost price minus accumulated depreciation. First get that amount and then you apply the percentage on that. So that is the methods that we apply to calculate your depreciation. How do we record the depreciation now in the books of the business? We record the depreciation in the books of the business by debiting the depreciation account, debiting depreciation, and you credit your account accumulated depreciation on vehicles or accumulated depreciation on equipment. Let us take a look at an example and see if you can handle this example here. The following information was taken from the books of VW Traders on the 28th of February 2019, which is the last day of the financial year. In your trial balance, I've got now my non-current assets consisting of buildings, equipment, and vehicles. 481, 26, and 320 respectively. Accumulated depreciation written off already, 42,000 and 81,500. Now we have got an adjustment, additional information. The adjustment tells us that we must make provision for depreciation. And the depreciation on equipment is 10% per annum on the reducing balance method and on vehicles at 20% on the cost price. So what you will do now is you will first now calculate what is the depreciation. So if I must calculate my depreciation now, I'm first going to take my depreciation on equipment. And the question tells you that to calculate the depreciation on equipment, it must be 10% on the reducing balance method. If you must calculate on the reducing balance method, you must first calculate what is the carrying value of the asset. And carrying value is cost price minus your accumulated depreciation. That is your carrying value amount. So go to equipment, where the cost price of equipment is 126,000 Rand. You minus your accumulated depreciation on equipment, and your accumulated depreciation on equipment is 42,000 Rand. Remember, with the diminishing balance method, you must first calculate your carrying value, 126,000 minus 42,000, that will give you 84,000. And then to calculate your depreciation, we say the depreciation will be calculated then as 10% of the carrying value, 10% of 84,000 Rand, and that will give you depreciation expense of 8,400 Rand. The depreciation on the vehicles. Depreciation on vehicles must be calculated. Go to your adjustment, 20% per annum on the cost price. So you go to the cost price, and the cost price of your vehicle is listed as 320,000 Rand. You must take 20% of that amount, and that will give you depreciation then of 64,000 Rand. So you have now calculated the depreciation on equipment, and you have calculated the depreciation on the vehicles now. To record that entry in the books of the business now, we say debit the account depreciation, and we will credit our account. Remember, accumulated depreciation increases on the credit side. We credit accumulated depreciation on equipment. Depreciation on equipment must be credited, and the amount on the credit side will be 8,400 Rand. You also credit your account accumulated depreciation on the vehicles, and the accumulated depreciation expense on the vehicles for the year amounted to 64,000 Rand. Your total expense, therefore, for depreciation for the financial year will be 72,400 Rand, which is 8,400 Rand for equipment and 64,000 Rand for vehicles. Any queries on the depreciation and the calculation of depreciation? It looks like everybody is all fine and all clear with this stuff. Right, we are going to apply all of this now and adjustments. We are going to apply this now in an activity. And the activity that we are going to focus on is in your notes on page 4. We take a look at the October-November 2013 question paper. October-November 2013 question paper. It is a business called Selepe Traders. They gave you a pre-adjustment trial balance, capital, drawings, mortgage, all of those accounts. And then at the bottom, we've got sales and purchases and freight on purchases and sales returns. All of that is given there. And then we have additional information. Under our additional information, we say that Selepe is a sole proprietor that uses the periodic inventory system. And we have got adjustments there, further adjustments from number 2 right down to number 8. And then they ask you under 4.1, show the cost of sales calculation. And under 4.2, they ask you to complete the statement of profit or loss and other comprehensive income. So we must do the financial statements over there. The information supplied to you, they gave you a trial balance and they also gave you adjustments. I'm going to take you now through the completion of this question and take a look at the notes that is called workings, the workings for lecture number 6. So we've got our trial balance there. Please note now that your trial balance consists of 2 sections. You've got financial position account section. That is where all the equity, all the assets, all the liabilities of the business will appear. Then we have got nominal accounts. So under your nominal accounts, you will have all your income, all your expenses, sales, purchases, freight on purchases, all of those accounts will appear there as part of your expenses. Your approach is the following. You go to your required at the end of the question to see what you are supposed to do. The question wants you to complete the financial statements, so you know that the format is very important. Your approach is you start with your adjustments, you work through your adjustments, you bring about the changes to the trial balance, and then you complete your financial statements. Okay. So let us work through our adjustments now. Adjustment number 1. Adjustment number 1 was just telling you that we are dealing with a business, a sole proprietor that uses the periodic inventory system. adjustment number 2. Adjustment number 2 tells you that at the end of the year, according to a physical inventory count, we have got merchandise of 185,000 Rand. So that 185,000 Rand is now called our closing inventory, value of inventory at the end of the year, 185,000 Rand. We have also got consumable stores on hand. Now, consumable stores, those are either packing material or stationery that we've got on hand at the end of the financial year. Right. So how does this now impact on my trial balance? And remember now, an adjustment will impact on my statement of financial position as well as on my nominal accounts. So let us take a look at our statement of financial position first. In the statement of financial position, I will now have inventory. My closing inventory I will now have as 185,000 Rand. And I will also have now a new account called the inventory of consumable stores. And my inventory on consumable stores is now 8,300 Rand. That's the inventory on my consumable stores. Just quickly do that. My consumable stores expense. Consumable stores, go look for your consumable stores. During the course of the year, we bought 16,000 Rand. I have still got 8,300 of that 16,000 Rand I've got left at the end of the year. So if I need to update my trial balance, my consumable stores account must decrease, and it must decrease by the amount of 8,300 Rand. So if I am now going to do my statement of profit and loss and other comprehensive income, I am not going to show my consumable expense as 16,000, but the adjustment has impacted and changed the amount. So my expense is now 16,000 minus 8,300. Any questions on that one? Remember, an adjustment changed something in the trial balance, and therefore it will impact on two accounts affected. One being a financial position account, and the other one being a nominal account. No queries? All right, I'm continuing. I'm on to my third adjustment now, adjustment number 3. In adjustment number 3, they are telling us that the Lepe Traders has now determined that the allowance for credit losses. Now, allowance for credit losses is a provision that we have there. And whenever you work with allowance for credit losses, the account involved is credit losses, and the other account is your allowance for credit losses. So our allowance for credit losses, according to our adjustment, the allowance must increase to 8,500 Rand. So currently, if you go to your trial balance, you will see that your allowance for credit losses is currently 7,300. So your allowance for credit losses, the new amount must be 8,500, And in order for your allowance for credit losses to become 8,500 Rand now, you will have to increase your allowance for credit losses. So let us go back to the trial balance now. Our allowance for credit losses is 7,300. We will have to increase that amount now by 1,200 Rand. And when you work with allowance for credit losses, the other account, the other expense involved here is credit losses. We don't have an account credit losses now. So we know now that we will have to add a new nominal account now called credit losses. And our credit losses is therefore the amount of 1,200 Rand. Our credit losses amount is therefore the amount of 1,200. So your credit losses is therefore the amount of 1,200 because your credit losses has increased and your allowance for credit losses has also increased, and the expense for the business then is then the amount of 1,200 Rand. I am on to adjustment number 4 now. Adjustment number 4. In adjustment number 4, they tell you that credit losses to be written off for the year is 1,500 Rand. This will fall into the category that we call now additional credit losses. There's more credit losses now, and our additional credit losses is the amount of 1,500 Rand. To account for this now, we are going to adjust our trial balance now, and your trade receivables. Your trade receivables will have to decrease now. We will have to decrease our trade receivables with the amount of 1,500 Rand because we are writing off 1,500 Rand from our trade receivables. And your credit losses is now 1,200 plus a further 1,500. Credit losses has increased, trade receivables has decreased because you are writing off the account of a trade receivable. Your trade receivables must decrease, you've got more credit losses, you've got more expenses, and your credit losses increase there. Any queries on this stage? Right, we are moving on to our next adjustment. Remember, our approach is that you first work through all the adjustments and you bring about the changes then on your trial balance. So my next adjustment, I am now with adjustment number 5 now. Selepe Traders paid 9,000 Rand for insurance on the 1st of August 2012. And this insurance was to cover for a period of 18 months. Now your financial year ends on the 31st of July 2030. So if you have paid now for 18 months, 9,000 Rand, you take the 9,000 and you divide that now by 18 months to see how much do you actually pay for 1 month. So if you take your 9,000 and you divide the 9,000 by your 18 monthly payments, you will see that you are paying 500 Rand per month. Now let us take a look at our payment. We have paid for August and September and October, November, December of 2012, January, February, March, April, May, June, and July. So you have actually paid for 12 months. You have paid for 12 months of the current financial year. And you have actually paid then for 6 months extra. So you have paid for 6 months of the next financial year. The 6 months that you have paid for the next financial year, we call that 6 months prepaid expenses. So to calculate your prepaid expenses, you will say that your prepaid expenses is therefore the amount of 500 Rand per month for 6 months. So you have paid 3,000 Rand in advance. You have paid 3,000 Rand for the next financial year. We call that prepaid expenses. We take that amount now to our trial balance and see how this will now impact on my trial balance. Under my financial position accounts, I have now got a new account called prepaid expenses, which is classified as an asset, and my prepaid expenses is 3,000 Rand. My other account affected will be my insurance account. So go to insurance, at the bottom there, insurance. Your insurance will have to decrease now by 3,000 Rand. Because even though you paid 9,000 Rand, only 6,000 Rand is an expense for this year, because the other 3,000 Rand is an expense of the next financial year. So that is how you will account then for the prepaid expenses. Right? That will deal with adjustment number 5. Adjustment number 6. In adjustment number 6, they tell you that the total amount of rental income received during the year amounted to 21,450. And the tenant is charged 1,650 per month. So how do we deal with this calculation? So you take the 21,000, take the 21,450, and you divide that now by 1,650. So if you take now 21,450 and you divided it by the 1,650 that he pays per month, you will see that the tenant actually paid for 13 months. So the tenant paid therefore for 13 months. You paid 1 month too much. We call that income received in advance. We have received 1 month rental too much, and that amount is therefore 1,650. So we have identified now that we are working with an account called income received in advance. We have calculated the amount of income received in advance to be 1,650. Back to my trial balance now. In my trial balance, I work with a new account. It's a liability called income received in advance. Your income received in advance is now the amount of 1,650. We need to our account for rental income. Your rental income is actually for 13 months. So rent income must decrease by the amount of 1,650. Remember now, guys, the adjustments will change the amount in your trial balance. So you must take a look at the adjustment, calculate the amount, and then you take it back to the trial balance and you update your trial balance so that when we do the financial statements, we've got the updated totals because we are just going to work with the updated totals. We are back now on to our next adjustment. The next adjustment that we are dealing with. Next adjustment, did I just get there quickly? The next adjustment is the adjustment number 7, and adjustment number 7 deals with depreciation. We must now make provision for depreciation. They tell you that the depreciation on vehicles must be calculated at 20% per annum on the diminishing balance method. Remember now, diminishing balance method means that if you calculate depreciation, you must first calculate what is the carrying value. And carrying value is nothing else but the cost price minus your accumulated depreciation. That is your carrying value. So if you go to vehicles now in your trial balance, you will see that the vehicle account at cost, the vehicles have got a balance of 145,000 Rand. Accumulated depreciation on the vehicles is an amount of 29,000 Rand. Therefore, the carrying value will be equal to 145,000 minus 29,000, which is an amount of 116,000 Rand. That is the carrying value. And the depreciation must be calculated at 116,000 times 20%, and that will give you a depreciation expense of 23,200 Rand. Vehicles, 23,200. So we can update our trial balance now. Under your nominal accounts, you will now have depreciation, and your depreciation expense for the year we have now calculated to be 23,200 Rand. The accounts affected is depreciation, the expense, and the other account affected is accumulated depreciation on vehicles. So your accumulated depreciation on vehicles will therefore increase with the amount of 23,200 Rand. Remember, each year's depreciation gets added onto accumulated depreciation. In our next adjustment now, we are still busy with the depreciation. We must now calculate the depreciation on equipment, and the depreciation on equipment is 20% per annum on the straight line method. Straight line method means the cost price. Go to equipment. In your trial balance, equipment has got a balance of the cost price of equipment is given to you as 85,000 Rand. Cost price of equipment, 85,000 rand. The adjustment tells you that you must calculate the depreciation, and the depreciation must be calculated at 20% per annum on the straight line method. 20% on the straight line method means 20% on the cost price. So you take 20% of the 85,000, and that will give you a depreciation expense of 17,000 rand. So my depreciation on my equipment is the amount of 17,000 rand. Back to your trial balance now. We are updating our trial balance. We've got a new account that is not in our trial balance. We've got a further expense for depreciation, and the depreciation expense is 17,000 rand. The other account affected will be accumulated depreciation, and accumulated depreciation on equipment will increase with a further 17,000 rand. So that adjustment number 7 dealt then with the depreciation. The last adjustment is adjustment number 8. Adjustment number 8, the water and electricity account for July was paid during August. So there is an expense of the current financial year that we did not pay during this financial year. If there is an expense that you didn't pay in this year, you still owe it, that is called accrued expenses. So in adjustment number 8, we are dealing with the account called accrued expenses. So go to your trial balance now. Under your financial position accounts, you will now have a new account called accrued expenses. And your accrued expenses will therefore be the amount of 2756. And your expense account that will be affected is your expense water and electricity. Water and electricity has currently got a balance here of 28,730. You will have more expenses, and your expenses will amount therefore to a further 2,706 that must be added to the expense that you have already paid. Right, students, we have now taken all our adjustments into account. We have updated our trial balances now. Okay, it's important that you know for each adjustment how it will impact on the accounts. And now we are ready to do our financial statement. The first part of the question is that they ask you now to complete. They ask you now to complete and to calculate the cost of sales. I'm going to give you an opportunity now to do the cost of sales calculation, take all the information into account, and see if you can complete for me the calculation of cost of sales. Right, students, let us take a look at the solution then of that. What you have got there, the calculation of the cost of sales. For the calculation of the cost of sales. Just get back there. The cost of sales will be equal to your opening inventory, and your opening inventory is the inventory at the beginning of the year, 125,000, plus your purchases. But the purchases, we are looking for the net purchases. So go to your trial balance, you will see that we have got purchases, as well as we have got settlement discount received of 5,210. Remember now, for the purchases, we are looking for net purchases, and net purchases is equal to this amount, and your purchases amount is the amount of 365,000 minus your purchases returns, but in this question there was no purchases returns, minus your settlement discount received, and your settlement discount received is the amount of 5,210 Rand, and that will give you purchases then, and your purchases is the amount of 359,790. Then you will add in all the expenses that you will incur in getting the stock to you. So you go to your trial balance, the nominal accounts, and you look for all the expenses that you will incur in getting the stock to you. Now in this exercise, we've got freight on purchases of 45,000 Rand. We've also got import tariffs of 35,415. That is part of the cost. And we've also got customs duties which amounted there to 9,300 Rand. Remember now, in other exercises, we also could have had the carriage on purchases. So freight on purchases, import tariffs, customs duties, all gets added onto the cost of your cost of sales now, onto the purchasing price, minus your closing inventory. Closing inventory, the value of inventory at the end of the year, you show it the amount there in brackets. So your cost of sales is equal to opening inventory plus the purchases plus the freight on purchases plus import duties plus customs duties minus the closing inventory, and your answer for cost of sales is the amount of 360,840. 360,840. Any questions for clarity on that calculation? Okay, it looks as if nobody's got problems. I'm worried about this now, eh? Or should I not be worried? Okay. Right, we move on to our next section, the B part of the question. Okay, Rumbi has got a question for me. Is there a question, Rumbuchi?
No, sorry, sir.
I can't hear anything. I can just see that you want to ask something.
I don't have a question, sir.
Okay. Is there a question?
No.
Oh, okay. Right. Okay. Everybody's fine then. We move on. The second part of the question is where you must now do the statement of profit or loss and other comprehensive income. So we take a look at the question now. I've got the format for you there of the question. We are busy with a business then called Salepe Traders. The statement of profit and loss and other comprehensive income for the year ended the 31st of July 2013. Our revenue amount. Revenue is the sales amount, but we are looking for the net sales. Go to your trial balance now and get the amount of net sales now. Your sales will be the amount now of 732,615 minus sales returns 35,415. That's your sales returns minus settlement discount granted of 3,300 and our revenue or our net sales, which we call our revenue, is the amount of 693,900. 693,900. Our cost of sales, we have calculated our cost of sales to be 360,840. That is our cost of sales, resulting in a gross profit of 333 and 60. 3,333 Rand and 60. Any queries there on the revenue and the cost of sales calculations? Right, I want you now to continue and complete for me the items that will appear under your other income, what will appear under your distribution, administrative and other expenses, and what will appear under your finance costs. So I want you to complete now for me the statement of profit and loss and other comprehensive income. Please remember now that the amounts in the trial balance has been updated due to the adjustments. So you must work with the new accounts now or the new amounts. Right, students, our time is running out, so let us just take a look at the solution now of this question and what you have worked through up until now. Right, our next heading is of course called our. And remember, if you want to calculate your other income, income accounts has got credit balances. So you go to your trial balance and you are just going to work with the nominal account with the credit balances. Right. First account there is rental income. But now rental income is subject to an adjustment. So your rental income in the trial balance is the amount of 21,450, but 1,650 of that amount of money, remember, was for the next financial year because the tenant paid for 13 months, and therefore the income for the current year must be the amount of 19,800 rand. Our interest on fixed deposit given to you as 3,410 rand. We've got an account called profit on sale of the asset, and the profit on the sale of the asset amounted to 15,500. And we also had another income account there called credit losses recovered, and our credit losses recovered amounted to 9,300. You will put that now in a block, and your other income in total is then 48,010. 48,010 rand. Your next heading is called distribution, administrative, and other expenses. In this exercise, we've got the following expenses. Remember now, expenses are nominal accounts with debit balances. I've got 225,000 rand as my salaries expense. My advertisements in my trial balance, the amount for adverts is 12,300. I'm just going down the list of my expenses now. My next expense is called my motor vehicle expenses or motor expenses. And my motor expenses is the amount of 18,945 rand indicated there. My next expense is interest on mortgage, but interest on mortgage is not part of my distribution, administrative, and other expenses. That will be shown under my finance costs. My next expense would be my consumable stores, and my consumable stores that was purchased during the course of the year was an amount of 16,000 rand. However, there was an adjustment involved here with my consumable stores because 8,300 of those items were still on hand at the end of the year. So what I have used up, what is my actual expense for consumable stores, must be 7,700 rand. My telephone expense, no adjustment there, 19,600. My insurance, there was an adjustment with insurance. The trial balance amount for insurance was an amount of 9,000 rand. We had seen that there was prepaid expenses of 3,000 rand, and therefore your insurance will be an expense of 6,000 rand. Our next expense is water and electricity, and even with water and electricity, there was an adjustment involved there. For all adjustments, please, you need to show the calculations when you do the financial statements. So we've got an expense in the trial balance of 27,830. But at the end of the financial year, there was an amount of 2,756 Rand that was not paid. Remember, that was called our accrued expenses, and that amounted then to 30,586. 3586. Our credit losses. Our credit loss expense will be 1,500 Rand plus an amount of 1,200. We have worked through those adjustments already. So my expense for credit losses will be the amount of 2,700 Rand. The depreciation expense, I have also explained that to you, and we calculated that. And your depreciation will therefore be the 17,000 plus the 23,200 Rand. And your depreciation expense therefore will be the amount of 3,200 Rand. That will take care of all our distribution, administrative and other expenses. You put that into one block, you add it up, and your distribution, administrative and other expenses, if you add it up, will come down to the amount of 363,031. 363,031. There is still one expense that you must bring into account. That is the expense for interest on mortgage. Interest on mortgage expense amounted to 28,750. That's the only finance cost that we have. And our finance cost is therefore the amount of 28,750. So we will now calculate what is the profit or the loss for the year. So you will take the gross profit of 333,060. You add your other income of 48,010. Subtract your distribution, administrative and other expenses of 363,031. You subtract your finance cost of 28,750, and you will come up with an answer, and that answer is a minus 10,711. Put that amount in brackets. It's a negative amount. That is why we will label that amount now as the net loss for the year. That is your net loss for the year. Bring into account your other comprehensive income is always zero for you guys. So our net comprehensive loss for the year is an amount of 10,711. And that will conclude our question that we had to do. Right. Any queries, guys, at this stage? Part of today's notes is also another question that you had to do there. I will upload the solution then to that question then also. So that was the May-June 2014 paper. It was a business called RG Stores. That's your homework activity. They ask you to do for 28 marks, a statement of profit and loss and other comprehensive income, and also a statement of changes in equity. If there are no other questions, that is the end of my session and discussion with you for today. I will upload the solutions, and just guys, please keep on working so that you can bear the fruits at the end of this semester then. Okay. Once again, a request just to complete the attendance register and also to complete the feedback session for us, please. I just want to make sure that I've covered everything. Right, Christopher, I will definitely post those solutions to you now. Okay. Right, guys, enjoy the rest of the afternoon, and we hope to see you then again next week, then the same time. Good afternoon or good morning. Is it still morning? Oh, good morning to you there, guys. Okay.